Well, Taher, Badshah, CIO, Invesco Mutual Fund is joining in now to tell us how to approach the markets. Taher, hi, good morning and thanks for joining in. So, everyone's talking about how the mid and small cap space is under pressure. But to be fair, the small cap index is down 6% this month, but it was the biggest performer last year. So, do you think the concerns are unwarranted, or would you now start to get a little more cautious about what's happening in the broader markets?
So I think, Sonia, we have been moving a little more cautiously compared to what we were, let's say, during the later part of 2023. And our view has been that while we still feel that overall the market is constructive and even the broader markets are reasonably constructive, but we have somewhat, we have to worry a little more about risk compared to what we were in 2023 because valuations have gone a little elevated compared to last year. So I'm not necessarily surprised to see the correction. And, a modest correction was on the way. Probably we have seen, like as you said, about a 5-6% correction. Much of the correction up until now has been driven by the valuation argument. It has not necessarily come down to the stage where we have started to question the earnings capability or the earnings power of the broader market in the near to medium term. And to that extent, therefore, I would like to think that the correction should not probably be very deep. We've seen, like as I said, about a 6-odd%. Can we do another 5-6-odd%? And then valuations start to turn reasonably more favorable for one to take a lot more constructive stance. Meanwhile, we also need to understand that quite a lot of the recent correction has been induced by some of the regulatory headwinds that we have faced both from the market regulator as well as the financial regulator.
Right. One other stock which is actually doing better in today's trading session has been United Spirits. It's up about 1.5%, more to the high point of the morning so far. And this perhaps because the street is reading a little more into the tweet that was put out by Prime Minister Narendra Modi, where he did say that they reaffirmed their commitment. That's with regards to the UK-India Free Trade Agreement. He had a good conversation with PM Rishi Sunak, and they expect that there could be an early conclusion of a mutually beneficial free trade agreement. If that was to happen, then all the bulk scotch that comes into India will perhaps not attract as much duty, and that may be margin accretive, provided all other taxes remain the same as well. So that's something we'll be watching out for. Taher, your thoughts on specific spaces, consumption in particular, discretionary, where a lot of people are positive because they believe, the wealth effect is leading them to buy better, not necessarily more.
Yeah, I think so. This whole consumption space has had a very divided kind of, scenario, seen a very divided kind of scenario in the last some time. And that trend by and large still continues. I think, from at least a growth standpoint, the mid to higher end segments of the market clearly seem to be relatively better placed in terms of further growth momentum. We can always argue about what companies in that particular space, but stocks of particular companies in that space are doing and where valuations are. But by and large, I think that is something which appears to be relatively more structural. Wealth effect is obviously a little more pronounced in that segment of the market. It's not to say that the mid to lower end segments of the market are not seeing wealth effect, but the impact is relatively muted, and it has been there for some time. I think that also to us seems like there could be a possibility of a cyclical recovery out there, and the impulse on growth out there could probably be a little stronger than what it has been in the last 2-3 years. But that's something that we are approaching very tentatively. We are examining some pockets of that segment which have underperformed and where growth has lagged. But I think the upper end of the market clearly seems to be in a strong saddle and seems to be a lot more structural in nature.
Okay, all right. Hi, Taher. Taher, when we met the last time around, you were saying that, BFSI is still worthwhile, though you didn't have any exposure to gold financiers. RBI has wrapped the knuckles of a couple of NBFCs or financial institutions in the last week or so. What's your view currently? How would you approach this entire BFSI theme? Will it be private? Will it be public? Or is there select NBFCs that you like?
So I think, Nigel, the last time that we would have discussed, I would have also probably said that, we did start to develop a preference more for the banks. We didn't really call out as much on NBFCs. We still are relatively light on NBFCs. You mentioned that we also don't have exposure to a few segments. But that divide or that tilt still remains, that we have still a little more bank heavy than NBFC heavy, and then on the other side we are obviously heavy more on some of the non-lenders. So to that extent, that probably has worked out reasonably well, I would say. So the preference still continues a little bit more for the banks. I mean, the impact has been relatively less for the banks from a regulatory standpoint. And within the banks, I think there is a edge of private sector banks over public sector banks to some degree. And not to say that we don't have a presence in public sector banks, but incrementally, I mean, do we see a little more value and the growth differential and the valuation differentials now having kind of, leveled off between the two parts? We think so. And that is a view basically that we are going with at least for 2024 as things stand now.
Okay. I know you may not want to comment on individual stocks, but I have to ask you about this move on ITC, right? I mean, the market is hungry for companies, good quality companies where valuations are looking attractive, and ITC is one of them. Do you think FMCG in general is that space which will now start to perform as valuations are not as expensive as some of its peers?
Yeah, so time and again, Sonia, these stocks in these segment have, presented themselves as a value proposition, and we have taken advantage of them as well. But, at times we want to, are they deep value? Probably not. Are they value in a certain context relative to their growth? That needs to be examined. And in certain cases, we see some bit of, like, as I said, a growth impulse as well, whether it be in the FMCG category or even in the consumer discretionary space at the low to mid end of the market. But we need to see it in conjunction with the growth outlook. And yeah, like as I said, I mean, there is a cyclical possibility. I mean, we are looking forward to inflation cooling off, and that obviously has affected these segments. So there can be a cyclical rebound if inflation starts to continues to be on its easing path. We obviously have the initial monsoon assessment that should come about in the next some time. And that'll provide a good cue in terms of what we can expect out of this segment as well. So I think we are examining it, as and when we see opportunities around it, but we don't want to be in completely deep value pockets either.
Where else are you finding value right now? Because, everyone's talking about this optimism around India, but also it coming at a price. A lot of foreign paper has been supplied into India. They're doing the valuation arbitrage here. We've seen, as Sonia pointed out earlier as well, the third foreign promoter actually cashing in on the Indian chips that they own. What are your thoughts? Where do you find value right now at a market which is so hot, so to say?
Yeah, so what we are seeing is relative valuation pockets, not necessarily on an absolute terms. Absolute terms, probably where we see value is, like as we discussed, only in the banking and financial services space, and could probably include even some select NBFCs. But apart from that, in most other pockets, it is more of relative valuation. We do see some, not necessarily strong value, but we see relative value in, let's say, the pharma space. That's something where we see the earnings rebound to be relatively stronger. And while even there too, valuations in the recent past have moved up, but compared to, let's say, the 5-year averages, we are not at very extended levels, and dynamics are changing out there as well. So we are looking at value pockets where we see simultaneously certain inflection points. I mean, if they're without inflection points, then it becomes a little difficult to spot. I think we are tentatively approaching, like as I said, some of those lower end segments of the consumer market. We are also, examining certain pockets in the commodity space, which perhaps have underperformed, and where we could see somewhat better headline growth compared to what it has been in the recent past. So it's selective. I mean, I wouldn't call that. We all know that it is not a market where we've got some very value which is strewn around all over the place. But I think these are the pockets where if we hunt a little more closely, we're likely to find some opportunities.
Okay, all right. Taher, how are you placed on the autos? Two-wheelers, some of them have rebounded big time. Bajaj, Hero, they've done quite well. Royal Enfield had a bit of a scare, but that one as well has bounced back quite well. On the two-wheelers, how are you placed? And on the whole, what do you like from the auto space at this juncture?
Yeah, so I think in the GAP section of the market, clearly two-wheelers at this stage is appealing. And this is where we are a little more exposed, I would say, compared to, let's say, and is where we have probably added to positions in the last some time compared to, let's say, the four-wheelers. It's interesting to see that, the product momentum in the two-wheeler segment, whether it be in EVs or even in the ICE segment, is of a somewhat better order compared to what it has been in the last 2-3 years. And in fact, we are taking a little bit of that segment as a possible indicator of a more broad-based revival in the lower end of the market. It traditionally has panned out that way. We'll have to see how it goes, but that gives us that little extra confidence that we might be able to find some more ideas in that space. So clearly, in the auto space right now, it is two-wheelers. We are not too excited about the four-wheelers. There are a couple of places where now valuations have become a little more reasonable, or even to some extent, I would say cheap. So maybe there is some attraction out there, but heavy positions are largely in two-wheelers and auto anchs.
But in two-wheelers also, just one follow-up there, names like, say, a Bajaj Auto, TVS Motor have already been, big gainers, right, in the last 1.5 years. So do you believe that this is a structural upcycle, that there could be lots more to go and it's just the initial phase in two-wheeler names?
No, so clearly, once again, in this segment, there are winners, and there are companies which are executing a lot more strongly compared to some others. And, in certain cases, the entire revenue mix is doing reasonably well, whether it be their two-wheeler portfolio, whether it be the EV part of the two-wheeler portfolio, in certain cases, even the three-wheeler opportunities. So, to that extent, we are able to tolerate somewhat higher valuations in some of these, especially if all cylinders are firing at the same time. And, they've got their, like as I said, product profile, and they've got their execution, and then that makes a lot of sense. So I think there too, we are approaching it with the view that, look, I mean, we are paying somewhat higher multiples. But as you said, maybe I don't know whether I should call it structural, but it has also been a cycle which has been quite weak for a good number of years, and therefore, can we have a 2-year upcycle? We are probably in the first year of that. That's quite possible.
All right, Taher, thank you so much for joining in. We'll leave our conversation at that itself. Thank you for your insights on the market and a lot of sectors where you find relative value and some in absolute value as well. Though